Welcome to the Invest for More Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out InvestFourMore.com. Hey everyone, it's Mark Ferguson with Invest for More. Welcome to another episode of the Invest for More Real Estate Podcast. Today, I'm going to be talking about quite a few things going on with my real estate investing, my flipping, some updates on my rental properties and what my plans are. I'm also going to talk about a few other things like a new book that just came out with the podcast and give you a general update on what's going on with me. So hope you enjoy the show and get some insight onto what's going on with me. It's been a busy summer, really crazy. So been a little hectic. I just got back from a conference I was at last week, and the week before that we were all in Disneyland. So that always takes a little bit of time. But one thing that's been really nice about when I go to these conferences, this was an REO conference with the NRBA, which is the National REO Brokers Association. And I've gone to this conference 7 years in a row now. Really a great conference, a great group. One of the reasons I was so successful in REO. But it's so nice because I realized at that conference and when we went to Disneyland for 7 days, I didn't open my laptop one time on both of those trips. And I was on my phone, I could do some work from there, but I didn't have to open my laptop at all. I virtually did no work. I could check in on things. I could send some emails to my staff. But one thing that's been really nice about how I set up my business is being able to take vacations without working, without stressing, which is something I know a lot of real estate people have a hard time with, especially agents. If you don't have someone helping you out as an agent, you're basically working all the time and it's really hard to get a break. So transitioning that into one of the new books I have coming out is a book that's not really on real estate investing or being a real estate agent, but more on your attitude, your goals, your mindset. And I talk about how I've kind of set up my life, my business, and what I do to really be as successful as I can, as happy as I can, not work 80 hours a week. I probably work less than 40 hours a week. I know I work less than 40 hours a week. I get to work about sometimes 8, but usually 8:30 or 9. I'm home by 5 almost every single day. And a couple days a week, I'm out golfing during the week too. And I virtually don't work on the weekends either. So yes, I do a lot of things. I keep myself busy, but that doesn't mean I have to work like crazy myself and drive myself insane, not see my family. My family is one of my most important things in my life. My twins are 5 years old now. My wife, Jenny, is awesome with them. But, I don't want to be one of those dads that works all the time when they're younger to try and provide, an awesome life. Once they're grown up, I want to enjoy them when they're younger and have fun with them and spend as much time as I can with them. So the book that I've got coming out is How to Change Your Mindset to Achieve Huge Success. And then piggybacking on that, why your attitude and daily habits have more to do with making more money and having more freedom than anything else. And this book is just all about everything I've learned in the last 3 or 4 years about habits, being positive, setting goals, dealing with adversity, turning things that seem horrible into good things. Just the way you look at life has such a huge impact on your success and your happiness. And I tried to put everything I could from my daily routine to, writing a dream story to managing my time. All of that is in this book, plus a lot more. Goal setting, of course, many of you know I'm huge on goals. I talk a little bit about investing in real estate and how those attitude changes and mindsets have changed me professionally, but most of this book is just all about, can be applied to any business, any career, anybody. It doesn't have to be real estate related. So I'm really proud of this book. Just came out this week. So it's on sale as we speak, $2.99 on Kindle, $8.13. It's a paperback, which is the absolute lowest prices I can set on Amazon. So it'll be there this week only, and then I'll be raising those prices. Oh, check it out. Leave a review. I hope you enjoy it. Really put a lot of work into my books lately. I've got a professional editor, got the covers made professionally. So it's really fun to try and reach as many people as I can and help as many people as I can. I've found the books are doing an awesome job with that and just giving people insight into what I do, how I've been successful, and how I try and keep myself grounded as well. So cool. Like I said, that'll be available on Amazon when this podcast comes out. Please check it out. Let me know what you think. Besides the book coming out, I've got my other books, of course. But as you notice, some of the podcast guests, the format has been a little different. Instead of interviewing ultra successful investors, I've done some interviews with people who are just getting started investing or maybe have a few properties on for a couple of years. And I think that's been kind of cool seeing what their roadblocks are, what they're trying to figure out, and what their goals are. So if anybody else is out there, and wants to be on the show, let me know. Send me an email, mark@investformore.com. I have some other guests lined up too that are more successful investors. I'm going to try and do a mix. Of course, I'll have shows like this where it's just me talking about what's going on with my investing. And then I'll have some other professionals on. I've got someone who we'll have on soon talking about self-directed IRAs, how to invest with those, and some other professional people as well, maybe some more agents, just to try and give a real broad spectrum of what's going on in the real estate world. All right, so now that we've got all that out of the way, what is going on with my investing this summer, with my rentals, my flips? So a few really big things to talk about. First thing is, as if you've listened to my podcast, read some of the articles on the blog, I was thinking about making a subdivision. So I bought 34 acres back in, I think it was March of this year. I had plans to divide it into 7 5-acre lots. I bought that land for $90,000, plus I had to buy a $28,000 water tap, so I paid about $118,000 for it. Went through the process with my assistant, Nikki. She's doing a record exemption now for some other business, and we kind of talked to the county, the planning commission, trying to figure out what it would take to do the subdivision. And on the surface, it doesn't seem too bad. It would be a minor subdivision, which means not as much is required as if you go through a full-blown subdivision in the city. This would be in the county. But as we went through the process, it is difficult, even for a minor subdivision. We would have to pave a road, even though the county road that comes up to the land is not paved. We'd have to pave the road on the land in the subdivision. Have to install water lines, buy water taps for every lot. Have to do some grading, draining assessments to get the fire departments to come check it out, figure out what would be needed as far as hydrants. There's just a lot involved. And we figured it would be over $300,000 in water costs, road costs to get this subdivision completed. So I would still make money. I mean, I figure I could sell those lots for close to $100,000 a piece, maybe even more. So there's obviously some profit there, but it would take 12 to 18 months most likely to get through the whole process of getting everything ready to sell. So I'd have just a ton of cash tied up, making nothing on it, no returns until probably at least a year until we could start selling lots. And then who knows how long it would take to sell the lots. Our market is very hot right now, but things can change in a year. And it's, lots are much harder to sell than houses themselves because it takes more money to buy a lot to build a house than to just buy an existing house. So in the end, after looking at how much money it would take to invest into the land, how long it would take, I decided not to do the subdivision, to just sell the land. I can use that money to flip houses and make at least as much as I would with the subdivision or more with a lot less risk, a lot faster. So, maybe it'd be a perfect situation for somebody else, but for me, it was a great learning experience, but it just was not going to work out. Now, all is not lost. I am actually selling, well, as of this podcast, when this podcast is published, I will have sold the land for $151,000. So I'm still making money on it, put any work into it really, except a few things on interest costs for the loan I got and some other stuff, but I'll make a pretty decent profit. And that just kind of shows that you can get awesome deals on the MLS. This was an MLS property that was listed on the MLS for $90,000. I don't ever look for land, but for some reason I saw the address and the price. I'm like, I'll just check it out on my hot sheet. And 34 acres. I'm like, oh man, I have to buy this. Even I had no idea what I was going to do with it at the time. I just knew it was an awesome deal. So I put an offer in that same day without seeing the property, got under contract, and then kind of figured out later what I was going to do. Maybe do a subdivision, maybe just sell it. But hey, I had 2 exit strategies, and this one worked out pretty well, just a quick flip. So that project is over. It's kind of a relief, just thinking about how long it would take, the risk, the process, the time out of my schedule as well to go through all that, knowing I wasn't going to do it. So it was fun. Maybe at some point I'll do it, but that also kind of gave me some insight into why there aren't very many subdivisions being built around here, big or small, just because it is such a pain. Water is so expensive here. The biggest cost by far for that subdivision was the water taps, which were about $35,000 a piece for each lot. And I have to pay for those before the subdivision could be completed and I could sell those lots. That's just a lot of money. If you're building a 100-lot subdivision, a 200-lot subdivision, I mean, the cost of water is just insane. Now, there's other ways to do it. Some land might come with water, but still, that's a lot to go through. Speaking of building, I came up with an article a few weeks or maybe a month ago too about building in Northern Colorado and new construction, how our market is going crazy. Our median price is over $260 now, and it was under $120,000 4 or 5 years ago. And so a lot of people are saying, well, prices just can't go up anymore. I mean, they've peaked. There's a bubble. There's no way it can happen. And I kind of had the same thoughts, maybe not that we're in a bubble, but that prices can't keep going up like they have, just because incomes in the area, there's a lot of land around here. They've got to start building more. Builders will meet demand. So I started talking to the city planning and zoning here in Greeley, and I could not believe what they told me. They basically said there is less building going on in 2016 than there was in 2015. There are less building permits, less new houses going up. And I'm trying to figure out why, what's going on. And they said just because of the cost of water, the cost of everything to do with subdivision is so much higher than it was before that no one wants to do it. And you factor that in with, it's really hard for builders to get financing to build a lot of houses. You know, they can maybe build a handful, maybe a few more with banks, but banks don't want to risk, financing a 100-house development. They just don't want to do it because they got burned in the last housing crisis. And a lot of builders are going to multifamily instead of single family because it's cheaper to build. They can split the water costs up. But the thing is, I'm in a town with 100,000 people. We're not an urban center. It's not downtown Denver. Most people don't want to live in a multifamily where I'm at. They have families. They want their own house. They want a yard. And I see an overbuilding of multifamily almost and an underbuilding of single family. And it's really hard to know what that's going to do to the market. I don't see single family housing decreasing anytime soon. I could see multifamily maybe having some problems, rents going down. Maybe they'll drag down single family a little bit. I don't know. I saw an article from a really big apartment builder saying they're pulling out of Colorado. They're not building any more apartments, any more multifamily because they think it's overbuilt for multifamily. In that same article, they said, but single family's underbuilt and we see no slowdown in the single family market. So I'm not sure what will happen when the two market segments like that are going opposite directions. I haven't really encountered that before, so I guess we'll find out. So based on kind of my insights in the market, what's going on, I don't think we're going to see a huge slowdown in Colorado. Maybe it'll level off some. Maybe it'll keep going. It's just really hard to say. I have sold 2 of my rentals. So I sold number 5 and I sold number 13. So my 5th rental property I bought in 2012 for $88,000. MLS deal. It's been rented for $1,250 to the same tenants the entire time I've had it. I put maybe $15,000 of work into it when I first bought it. But this house was really hard to rent. It had no real eating area, no dining room. The tenants who were in it were they were always behind. I mean, they'd catch back up. They get behind, they catch back up. But they're just kind of a pain as well. And then they got way behind on rent this summer, could not catch up. So we ended up evicting them. They moved out peacefully, got all their stuff out, but we still had to go through the courts. And we ended up getting an agreement where they're paying me like $50 a month for like 2 years to catch up on their rent. But because of the dining room, because the house was hard to rent when I first bought it, and our market is so strong, I decided to sell that house. It's one of my least favorite rental properties, so I sold it. I ended up selling it for $199,500. So I did pretty well on that one. Only did a couple $1,000s in work, if that, when they moved out to get it ready to sell. So sold that property. and I'm getting back, $120,000 in cash after paying off my loan. And then rental property 13, I bought in 2015, last year. It's a duplex, the only duplex I bought. I bought it for $120,000. It had tenants in it when I bought it. They were paying, I think $1,300 a month for both units combined. So decent return. I didn't have to put any money into it really in the beginning, but I knew it would need some. It needed a roof, some paint. And this summer came along and both tenants moved out. So I knew it was a good time to fix it up, get some of the repairs done. And then I started thinking if I wanted to sell it as well, because the market had gone up so much for multifamily. It's kind of a college rental, which has not been my niche. It hasn't, I don't mind them, but I love the single family rentals more. Tenants are more stable. They take better care of the house. So I decided to sell that one as well because it was one of my least favorite properties as well. So that one sold last week for $182,000. So I bought it for $120 last year, put maybe $10,000 of work into it, maybe a little more. And all that happened recently in the last month or so. And we sold it for $182,000. So that was another awesome investment, obviously. So I got quite a bit of cash coming back from that one too. So now I'm down to 13 rentals in Colorado and 14 total if you count my turnkey property in Cleveland. So I still have properties. I'm not going to sell any more in the immediate future. That was my plan, to kind of sell a couple that I didn't like as much. And those were the two that were kind of last on my list. But besides selling some properties, I have been working on refinancing some properties. So if you've been paying attention to the blog, which, that's keep saying that. Hopefully you are if you listen to these. I've been trying to refinance some rentals with one of the larger national rental property lenders. And that was Jordan Capital Finance. I went through a process with them that took 3 months probably of getting something agreed to, underwriter, preliminary approval. Basically, we'd agreed to a rate on a 30-year fixed loan, about 6 to 7% in that range. They're going to give me 1 to 2 points and do like 70 to 75% cash out refinance. I'm going to do 70% cash out. So I was going to refinance 7 properties. I was going to get about $270,000 to $300,000 cash out, depending on where the appraisals came at. And I was like, great, let's do it. So in May, I paid for the appraisals. They wanted me to pay for the appraisals up front. It's like $520 for each appraisal, which seemed kind of high to me, but I said that's the cheapest I could get them. Paid for those, got the appraisals back, and then Jordan comes back and says, oh, hey, we're sorry, but the company that lent us money on 30-year fixed loans just stopped lending, so we can't do the loan. I was like, oh, man, I was pretty annoyed because they never even told me that they're using a third company to do this. I thought it was all directly through them. And then they said they had some other options. They could still do it. Well, it turns out their other options were 5-year ARMs at 7%, and it just was not even close to as good of a deal. And then it turns out 6 of the appraisals they did could not be transferred to other companies because it wasn't with one of the approved appraisal companies. And they wanted me to pay for new appraisals to do that. They wouldn't even pay for it themselves, even though it was their mess up. They wanted me to pay for new appraisals if I want to move forward. So I talked to a couple other the national lenders out there. None of them could give me that great of a deal. So I came back to my local portfolio lender, who I financed all my properties with, and asked if they wanted to refinance some of my properties. And the problem I had with them before was I had $2.5 million in loans with this one bank in Colorado. And that was kind of their limit for what they'd lend to somebody without getting approval from the committee on every loan, which can take longer, be kind of a pain. But since I sold 2 of my rentals, and then a lot of my balances on my loans have been going down, including my personal house, I had dropped quite a bit below that $2.5 million range. So they said, sure, we can refinance some of them. We can give you up to $250,000 cash out. We'll do 5-year ARMs with 30-year amortization, or 7-year ARMs with 30-year amortization, 4.5% interest rate, no balloon, 75% loan to value, 1% origination fees. So in the end, I'm pretty happy that it didn't work out with Jordan or some of the other banks, because I got a much better deal with my lender. Sure, they're ARMs, but they're still way lower rates. I mean, even if the ARM adjusts in 5 years as high as it can, I'm probably going to save money over doing the 30-year fixed loans at the higher interest rate. Plus, I'm getting a higher loan to value, more cash out, And instead of refinancing 7 properties, which I was going to do with Jordan, I'm refinancing 4 properties with my portfolio lender and getting almost as much money back out because I have the higher loan to value ratios. And my bank said they can make those appraisals work. So that was really nice as well. They just shows the flexibility of a local portfolio lender, how awesome they can be if you find a good one. So that should go through here in the next month. That'll be nice, getting that money coming back through the refinances. And I'll have plenty of cash sitting around because, as you know, I haven't bought any rentals since September. It's been almost a year since I bought my last rental property. And I've talked about this before. The market in Colorado is just insane with prices. You know, some of those rentals I told you, I bought for $120, I bought for $88, I sold for $200,000. You know, I love to get a good deal. I love to pay below market value. So I could get the properties that are similar to that for less than that. You know, maybe I could pay $160,000 or $150,000 for properties like that, put $20,000 of work into them. But the thing is, they're not renting for that much more than they were 4 years ago. They are renting for more. Rents maybe gone up 20, 30%, but prices have doubled almost, or more than doubled in some areas. So while rents go up 20 to 30%, that's great, but prices have doubled. That means the rent to value ratios are just way worse than they were when I bought my properties even last year, especially 3 or 4 years ago. I just can't get the cash flow I was getting before. Sure, I can buy below market value and have equity, but I've got to put more cash into the properties because prices are higher. You know, 20% down, instead of putting $20,000 down on a $100,000 property, I'm putting $40,000 down on a $200,000 property. My returns are way less. The cash flow is way less. The cash I'm investing is way more. It just doesn't seem worth it to me. And yes, I have my goal to buy 100 properties. I'm still fighting for that goal and want to get there, but I'm not going to sacrifice my financial well-being or start making bad deals to get to that goal. I'm going to be smart. I'm going to do things the right way. So I am still interested in investing in other markets. A lot of you have been sending me emails, asking me questions, saying, hey, what's going on with Florida? When are you going to start buying more rentals again? And I still have plans to buy down there. It's just going a little slower than I thought. I did not do 1031 exchanges with the rentals I sold. I figured I would just pay the taxes because when you do a 1031 exchange, you have to invest all the money, all the cash you get from the property, plus the properties you buy have to be worth at least as much as the property you sold. So for the house that I sold for $199,500 and I got $120,000 some cash back, I would have had to invest all that cash into new properties, and the properties would have had to be worth at least $199,500 to avoid paying taxes. Now, I wanted to buy cheaper properties than that. I'd have to buy at least 2 properties, find them in less than 45 days, and I didn't want to be rushed into making investments that might not be smart. So I'm still doing research down in Florida, still trying to figure things out. I didn't want to be rushed into it. It's also nice to have that cash available for flipping, other things going on. So that is why I didn't do the 1031 exchange. Yes, it'll cost me a little bit more money in taxes, but if I get 2 okay deals doing a 1031 exchange, maybe I get them 10, 15% below market. That's great. But if I can get 2 awesome deals, you know, they're 20, 25% below market value, I'll make up for that tax savings right there. By just getting a better deal on the properties I buy, I'll make up for the money I had to pay in taxes because I'll get a better deal. I'll probably get better cash flow. I'll just taking my time, I think, is worth it over trying to rush into buying something. All right. Now I have a couple markets in Florida I'm looking at. Like I said, you can get under $100,000 homes in both those markets that are rent for $1,200, $1,500, depending on how high up you go. Very similar to what I was doing here in Colorado. Newer houses need some work, but not a crazy amount of work. And I think the economy is doing really well down there. Plus, the market is not even close to recovered from the crash they had. I think there's a lot of upside. So still trying to figure out exactly where I want to invest, how I want to invest. Need to find some lenders, do some more groundwork down there. But I am going to invest in Florida, hopefully this year. I can't give you a time frame for when. But another reason I haven't focused so much on the rentals is because my flipping business has been going bonkers. So I've really been focusing on that. I had a project manager I hired last year who really messed things up a lot. So properties weren't getting fixed, things weren't being done fast or right, things weren't being charged right, we were getting double charged. There's just a lot of stuff going on. It was crazy. And a lot of that's my fault because I wasn't providing enough oversight, didn't have the systems in place. But in the end, it was a good thing. Like I said before, when I'm talking about my book, some of these things that happen to us, it just feels like, oh my God, how could this happen to me? I don't deserve it. Why me? Why this? But a couple of years from there, maybe a couple of months even, you'll say, oh my gosh, I'm so glad that happened to me. Even though it sucked at the time, it seemed horrible. It was a good thing. And that's kind of how this has worked out. I was talking on the conference call for one of my coaching programs, and they're like, wow, that guy really screwed you over, didn't he? I'm like, yeah, he did. But in the end, I changed my whole way I did my flipping business. I changed all my systems. I worked more closely with the people involved, and it made me do things so much better because that happened. It made me create systems and get the right people in place. And if he'd just been okay and not done such a great job, I would probably be in a worse situation now than if he had totally bombed everything and blew it up. So it's actually a good thing. I'm happy where I'm at now. I've got 11 flips. I'm selling one this week. So I'll be down to 10 flips. I've got 2 more under contract. I'm buying 2 more flips that are under contract to sell in the next month. And after looking at my projected numbers, I am thinking I will be able to flip 19 houses, sell 19 flips in 2016, which would be awesome. And I've historically averaged over $30,000 in profit on each flip. And looking at the numbers this year, I might even be above that because I'm going to have some high dollar profit makers this year. If everything goes as planned, that'll push that average up. So it'll be a good year for flips. That's why I've been concentrating so much on them, is to get things put in place. My goal is to do 20 a year now. And that's buying about 2 a month, selling about 2 a month. If I can do that, I can reach my 100 rental property goal, no problem, because I'll have the money to invest, the cash to invest, and I can still find flips in Colorado. Much easier to find flips and rentals because I'm not worried about cash flow. I'm not worried about returns. I'm worried about profit and what it's worth when I sell it compared to how much I can buy it for. So flipping's going awesome. I had a high dollar flip that I bought for over $500,000 last year that has been occupied, and I have some agreements in place for the tenant to move out. So hopefully that one will be on the market in a month or two. And on that particular property, I'll be making a very nice profit on. I'll talk more about that when it becomes vacant. I can discuss some more details. So that'll be a very nice one to have. And then, like I said, I've got a lot of other flips in the pipeline. Got a new contractor we're working with very closely. Who's got a big crew, who's been doing awesome. That's been the biggest challenge with flipping, is finding good contractors, good work. I've been working very closely with them to try and get those processes put in place. All right. So flipping's going great. Doing very well with that. I've got financing put in place through my local banks, private money through some investors, private money through my sister partially. I also have a lot of hard money lenders who've given me some different options. I haven't gone that route yet because I've got the private money in the local banks. But if anybody is looking for hard money, different lenders, shoot me an email, let me know. I might be able to get you in contact with some of those guys. Rates are dropping on hard money. Some of these national hard money lenders are around 10% and 2 points now, where they used to be 14%, 3 or 4 points or more. So definitely some opportunities there for hard money. But yeah, I'm in a good place now with the refinancing, with selling a couple of my rentals, with getting the flipping business under control. I should have quite a bit of cash to invest in rentals, should have more time to invest in rentals, and I'm getting the flipping business under control, the process in place. It won't take nearly as much time from me. And yeah, hopefully before the end of the year is up, you'll see some new rental properties that I'm purchasing in a new market, and we can figure out what the returns are, how they do, and maybe they'll do as well as my rentals here, maybe not. If they do anywhere close to as well as my rentals have done here, I'll be a happy camper. I looked at my numbers, and I've invested about $300,000 in cash into all my rentals. And when I had 15 in Colorado, they made me about $8,000 a month in cash flow, and they'd increased their equity was about $1.5 million. Part of that was appreciation, part of that was buying below market value, making repairs. But $300,000 to $1.5 million in less than 5 years is pretty good. A lot of those properties I bought a year ago. With my refinance, with selling some of my rentals, I will actually get all of that cash back plus some. So I'll have basically taken at least $50,000 of cash out from all the rentals I've bought. And I'll still be making $6,000 a month in cash flow around there. And I'll have over $1 million in equity in those properties. So pretty happy with that investment. Having gotten out $50,000 and $1 million in equity in that cash flow helps to be able to find those markets that will appreciate and have cash flow at the same time. That's what I'm really looking for. All right. That is all I've got for today. Hope you enjoyed the podcast. Like I said, it's been a busy summer. Still working hard on rentals, though. Still working hard on the flips. My real estate team, they're going great. So it's another aspect of the business. Blog's been doing awesome. Be sure to check out my new book. I think you'll really enjoy it. My whole point of writing that book is just to help people change their attitude, get the right attitude, and have success in whatever they do. Plus, at the same time, be happy. I mean, the goal is not to work yourself into the ground and have money, but not be able to enjoy it and be stressed out all the time. The goal is to have money, to have time, to have freedom so that you can enjoy life, so you can be happy, spend time with your family, do the things you love. I'm thinking about taking my wife to Monterey next month to go to a car auction just because I've never been to a car auction. They've got a Lamborghini Miura, a bunch of Countaches, Diablos, all kinds of cool stuff I'd love to see. I'd love to buy them too, but I don't think I'm in the position yet to buy a $400,000 car or the Miura, a $1.5 million car. But it'll be really cool to see them, to experience an auction, to see the bidding, to see all that. And I'm in a position now where I have the freedom, the time, and the rentals. Real estate has been awesome to get me to that point. So check out the book. I think you'll enjoy it. The sale will end this week. Once prices go up, they won't be crazy. It'll be like under $10 for the Kindle for sure, under $15 for the paperback. And of course, leave me a review. Reviews help me out more than anything else. I can see how you feel about them. It lets other people see how you feel about it. And also, that's how Amazon, the more reviews you have, the more Amazon will promote it to other people. So love to get my books out there and reach as many people as I can. All right, cool. Thank you guys for listening. If you have any questions, be sure to leave a comment. Email me, mark@investformore.com. And I'll talk to everybody next week.